Hey guys, today we're talking about mutual funds and how they work. Most people have no clue how they work. There's a lot of different fees. There's a lot of misconceptions out there. Today we're going to try to educate and get you to the bottom of the truth on mutual funds. If this is something that's top of mind for you, you're wondering if you should have mutual funds or you shouldn't in your portfolio, or you just want a second opinion on the portfolio, this is something we do every day on a day-to-day basis. This is my passion. Go to the website, go to speaktorob.com. We'd love to book a free, no obligation consultation with you, put some peace of mind for you and get you sleeping at night with respect to your mutual funds or your investments. I'm Rob Tatro from robtatro.com, head of the Tatro Wealth Advisor Group here at Canaccord Genuity Wealth Management. Before I get to the chat, please take a second and subscribe to our video. Love to also hear any comments that you might have with respect to the mutual funds. So mutual funds, as you potentially know, or maybe don't, they're actually pooled investments. So they are pooled investments structured through a trust unit. The companies that offer these units offer shares of the trust unit, which is a pooled aggregation of the multiple different stocks, usually, or bonds in the fund. So think of a fund that's called, we'll call it a Canadian dividend fund. That fund will likely have a whole bunch of different Canadian dividend paying securities. It'll have insurance companies, banks, it'll have telecommunication companies, it might even have consumer discretionary and consumer staples. Basically anything that pays a dividend will likely form part of the Canadian dividend fund. There is a third-party manager that is managing the fund. You own units of the fund. They can issue more units or redeem units as needed. You can sell daily on a daily liquidity for most mutual funds. So at the end of the day, the aggregate value of all the shares of the portfolio are valued and divided by the number of units, and that is your unit price every single day. And I believe they go to 6 or 8 decimals, so you're getting the exact value of it, and that is your value. That's what you own at the end of the day. And every day you can put a buy or a sell, and the buys and the sells are triggered at the end of every single day. Everyone gets the same price that day for a buy and that day for a sell. Now this is contrary to stocks, which trade daily on the TSX or on the Dow or on the NASDAQ, and it's contrary to ETFs, exchange-traded funds, which trade also daily on an exchange. Those have bid and asks. So you have a bid and you have an ask, and if there's a match on the price, that's a trade. The shares go from one to another, and that happens millions of times every day for stocks, for ETFs. For funds, it happens once at the end of every day, and it's buying and selling. They get squared off, and there are either more or less units of the trust. Now, the pros of that are that they're easily accessible. You can get different niche plays. So you could get, for example, a mutual fund about far Asia, or you can get Europe, or you can get like small caps, or you can get micro caps. A whole bunch of different niche sectors that you can get exposure to. The pros are you can also get diversification. So if you have a small amount of assets and you're looking to start out investing, well, you can't really just go out and buy one share of Berkshire Hathaway, right, or one share of Google. So this allows you to diversify across different sectors. You get professional management, and you also get, you get the exposure, you get the professional management, you get the liquidity. It's a lot more simple. It's a lot more simple, and hopefully, if you do own these funds, the manager is outperforming. The cons, some would say the cons are definitely the fees. So the fees are generally higher than what you would pay with an advisor. Sometimes there's not full transparency on all the funds, on all the fees. Some advisors might be charging what's called a deferred sales charge. Some advisors might be charging what's called a low load. Now these are fees that are billed in addition, that can be billed in addition either when you're selling. There can be excess transfer fees, so if you're moving in and out of positions. There can also be different classes of funds which are kind of unclear to you which fee you're paying. So transparency can be an issue, although in the past the government's kind of made it a priority for them to increase the transparency in mutual fund fees. But it's to be seen if that's kind of working yet with the end client, with the end user. So if you do own mutual funds, if you're wondering about all this, guys, give us a call. Go to the website, go to speaktorob.com, and we'll set up a call, because it's not simple, it's not complicated. Because what mutual fund should be in what portfolio is a whole other ballgame and a whole other decision, right? Because There are certain mutual funds that make sense for certain classes of people, for certain asset classes, and for certain groups of investors, and certain mutual funds will not make sense for investors. So it really depends on how much you have in terms of assets, how much you have in terms of net worth, how much you have in terms of volatility, and what your liquidity is, who's managing your assets. There's a lot of different questions that come into play as to whether or not you should own mutual funds. You should also know that the tax implications of the fund are split evenly across with everyone. So whether or not you own the fund for the whole year or not, you get the tax implications of that fund, and you don't get to control. So if there are buys and sells that are happening inside of the fund, inside of the pooled assets, and they're crystallizing capital gains, or maybe they're moving out of stocks and going into income producing investments, you don't get to control the tax implications of that. So that means that you are now getting the tax consequences along with everyone else in the country. You're getting the exact same, you're in the same boat with all of them. Whether it's in your favor or not, unfortunately, that's not a pro either. All right, folks, we talked about mutual funds. I'm Rob Tatro from robtatro.com. Love to hear from you further. Please take a second to subscribe to our videos, and go to speaktorob.com if you'd like to book a free no obligation consultation. Thanks for tuning in today. Have a great day.